Thank you.
Welcome back to Worldwide Exchange. Let's take a quick look and see how gold prices are faring so far today. Yesterday, we hit that key $1,800 an ounce. If we can check it out and see exactly where things are going right now, it looks like we're pulling back just slightly here at $1,786 an ounce and some change. But luckily, we're joined by Tom Lydon. He's the editor of ETFtrends.com, along with our guest host who's still with us, Patrick Armstrong from Armstrong Investment Managers. And Tom, if I can start with you, I mean, gold is marching higher in general right now. We just said it's pulling back a little bit. But is it too late to get in? I mean, where exactly do you think the prices of gold are going to go? I mean, Goldman Sachs is saying $2,500 by year end. If that's true, then maybe we're okay. You could get in now and still make those profits. But what's your view?
Yeah, we were asking the same question when gold was at 1,000. But today, when sentiment is so low, investor confidence is low, the questions about foreign currencies, even our own currencies, and the downgrade. The thing is, with ETFs, investors have an opportunity to hedge their portfolios in a very liquid way. 5 years ago, it was tough for investors to play gold. You're having to buy gold coins, you pay commissions, pay storage. But with the liquidity of ETFs and the fact that these ETFs are actually backed by physical gold that are stored in London and Swiss vaults, it's great. It gives you confidence that if you want to hedge your portfolio a bit and you feel that things may continue, you can. And if you want to sell, you can sell just like any other stock on the exchange.
Right. So let's talk a little bit about currency and about the things that are sort of helping gold to shoot higher. What happens, knock on wood, that things stabilize a little bit? I mean, in general, that would be good for the global economy, but then what happens to the price of gold?
Well, I think gold as an asset class has really arrived in the fact that it's available for people. I mean, there are many things that are going well for gold, aside from the currency and the fact that sentiment is down. Global demand is up. You've got emerging markets where citizens who are now moving up to the middle class because they're making money, aside from putting better food on the table, they're actually buying gold. Gold is, with this global currency issue, has become a safer place for people. And then the final thing is with inflation. We're seeing little hints of inflation across the board, and I think we're going to continue to see so, especially when global economies get better.
Okay.
Patrick, do you buy it? Is gold the place where we all should be having our funds at the moment?
We've got 3 to 5% of our various portfolios in gold.
Because most people do. They don't have a whole lot in gold.
Yeah, this time last year we had 9%, so we've made the mistake of trimming our positions in gold, thinking that it's right. We did a very simple analysis looking at money supply growth and gold prices. And gold growth grew about 30% above money supply growth over a 30-year period, and that was about 9 months ago is when we started to trim. And obviously it's not been the right decision. So we hold gold, hope it doesn't rally. It's very difficult to value gold, though. There's no real proper way to do it. I think you can make the case that currencies are going to be structurally, the purchasing power destroyed over the next decade, because that's the only way to manage the debt in the West. And gold will be the store of the value, the beneficiary in that kind of environment.
I guess hindsight is a great thing, Courtney?
Yeah, exactly. If we all knew then what we, now, later, whatever, we know what we're talking about when we get to hindsight. But I mean, if I could sort of pick up on your emerging markets point there, what is the demand like, or how has it shifted even recently? Who is buying gold that maybe wasn't previously when it comes to our global trading partners?
Well, first, if you look at sovereign nations, for example, China is a big buyer of gold, and they're actually buying these gold ETFs. The fact that there are 2,200 tons of gold stored in vaults in London and Switzerland, and the fact that the liquidity is there. I mean, that's the great thing about it. And as ETF expands, not just to gold, but to silver, but to other commodities as well, I think what we're seeing is investors who've been very frustrated with the markets in general are now looking to other ways that they can hedge their portfolios. And currencies is another area where ETFs have really exploded. And then most recently this week, we've talked a lot about volatility, where the first really 8 8 or 9 months of this year, volatility's been dead, and then all of a sudden, in the last 3 weeks, boom, exploded 123%. They're actually ETFs that track the volatility index. So I think for investors today, as we're somewhat frustrated and many are sitting on the beach with their vacation spoiled because their portfolios have tanked, they're now looking to areas that they can hedge some portfolios a bit.
That's a good point. There is like gold's the frustration trade, perhaps.
It sure is. It sure is.
Well, thank you so much, Tom Lydon, for joining us today. I know you've got a busy day ahead. Tom Lydon of ETFTrends.com.